Hi again. Right, in this video, video number 11, we're going to be talking about understanding different time frames. Alright, so let's move over to our trading station. Oh, that's my browser. That's what I'm just trying to find out about different types of color blindness there for the moment. Okay, so let me just quickly change this over. I've got a little color blindness thing here. Okay, so blue still comes out as a blue purple. Our blue comes out as a lighter blue for them. Okay, and blue's an aqua, indigo blue, green. Okay, green is their blue, green is their brandy green, green is a dark green. Okay, what I would do, because blue comes out a different color, so I will actually do green as the blue. So let's go back, bar up, and let's use a green. Something that's, I believe forest green should be okay. Okay, there we go. I really hope that this color is okay for everybody. Okay, alright, let's move on to the different time frames that we can use. Okay, right, there are several time frames that we can use to make some sense out of the market. Okay, we have the 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly and monthly. Now, if you were to trade on like the 1 minute and 5 minute trades, these are basically guys that like to scalp. Right? And scalping is essentially if you have a trade that is open and closed within a few minutes, or if you had opened and closed a trade that only gained a maximum of like 5 or 6 pips. Again, it varies from broker to broker, so you really need to pay attention to their terms and service about scalping. They would tend to use the 1 minute and 5 minute time frame charts. The 15 minute all the way up to say the 4 hour time frame will be for guys that want to trade that particular day, don't want to leave their trades open longer for that period of that day. And then again, the 4 hour can also be used in conjunction for long-term trades all the way up to the monthly. Now, when I do my trading style, this is one thing that you will need to understand as you go through these training materials, is that I'm not a person that likes to trade every day to try and make as much money as I possibly can, although the notion is nice and I have tried it, and I can tell you that when you try too hard you get burnt out and mistakes start to happen. The best way to trade is to trade in a mindset where you don't have any kind of problems personally, whether it be financial, whether family or business related or whatever. All right, so so that's what I tend to do, is trade off the 4 hour and the daily time frames, and I probably would have like one trade a week or one trade a month. It all really depends on my mood. But I will be teaching you strategies that you can use on a daily basis. You can open as more than one trade a day if you like. I will be giving you different variations, all right? But for the most part, we will be looking at like the 1 minute and 5 minute time frames to give you an understanding on how to do some trades pretty quickly with these two time frames. All right, but what you would essentially, the main thing that you really need to know, the main thing that you really need to know is that for every if you're on the 5 minute time frame chart like we have here, we've got on the top left hand corner, it shows us a currency pair, then M5 is in there as well to let us know that we're on the 5 minute time frame. Okay, if we open up a secondary chart, we can now see down the bottom in the tabs it shows you the time frame that you're actually on as well. Now, when each one of these bars represent 5 1 minute bars. Alright, here's your 15 minute bar chart. Okay, now for every one of these red and green bars that you see on here, alright, is going to be represented by 3 5 minute bars or 15 5 minute bars. Okay, and likewise with the 30 minute time frame, one of those bars consists of 2 15 minute time frames, 6 5 minute time frames and 30 1 minute time frame bars. and so forth, and so on, and so on, and so on. Now, what I've tried to explain to my students in the past to try and give them an understanding of why and how you should use different time frames to work with your analysis and what have you, is try to look at it from a point of view that, let's say like on a daily time frame. Let's just say that we're in an airplane, like in a 747 or something, so you're in your 40 or 30,000 feet, up in the air. So this is the bird's eye view that you're getting. Now this bird's eye view isn't really giving you that much data in real time, like as each second and each minute goes by. Okay, what does give you that kind of information, if we go back to the 1 minute time frame, we can now start seeing that these bars are appearing, they're developing every 1 minute. So there's always constant information being plotted on the charts. Therefore, we're getting constant feedback of what's going on at that particular moment and then that particular time. Okay, so if I wanted to do a strategy based off the daily time frame, like now we've got a double bottom here, so we should see this retrace after a medium of a support has been accepted. We've already broken a support here, but we're leaning on this support over the left hand side, but there's some more support down on the bottom, so we could see this come down to 128.72, and then once it hits there, if there's no further rejection to go on the downside, it will go back up to 130.96. But if there is a rejection on this particular level, it will keep on coming down. Now I'm going to ask myself, right, okay, daily time frame, if I'm going to be working off the daily time frame, then you can expect a deficit of around about 150 to 200 pips over a course of 2 or 3 days, because you don't really see this activity going on the daily time frame. Alright, so when you're working off the daily time frames, you should really have a lot more patience and a lot more trust in your decision making. Alright, and let these trades run over a course of 3, 4, 5 days. Now, if you're using a smaller time frame chart, like a 15-minute time frame chart, you can act more or less off these signals straight away. But again, you would need to really take a look of what's going on. Like here we have some candle patterns going on. Now let's just assume, for the time being, before we even get into the candlestick formations, that let's just assume that this particular candle formation here is the one that I wanted to go in on. Now, if I wanted to see if this has got any more strength to go up higher, what I would tend to do is I would do one of two things. I'll go to the 5-minute and I'll go to the 15-minute. I'll go to its neighboring chart time frame, one to its left and one to its right. The one to its right was the 30-minute time frame, and one to its left was the 5-minute time frame. All right. So now I'm seeing these some more candle formations down here, and I'm seeing there's some more patterns, like there's a hammer down here at the bottom. It's just been confirmed, so I probably might want to say to myself, I will go long on this one. All right, to go long, to buy this trade. So let's go back to the 5-minute time frame. Now, in the 5-minute time frame, there's a little bit of resistance here. It's not a great deal, but there's a little bit more up here with these little spikes, with the tail of the wings and the sticks at the bottom, the wicks at the bottom. All right, so there was probably my next area where it might go towards and stall. So I might turn around and say to myself, well, I don't really want to go long on this particular trade because there seems to be too much traffic ahead of it. All right, but when we go through into these like individual videos going over the indicators, you'll start seeing me going into higher time frames and then into lower time frames to really basically to get an idea of what's going on from a wide standpoint, from a daily perspective, and then zooming in to seeing what it's like into a real-time perspective, and then try and work out or not whether there's going to be more strength on the upside or whether there's going to be more strength on the downside, or to even perfect my signals. Alright, so I could possibly come in on the, say, like the 1 hour time frame, take a look, seeing what's going on, and I might have some indicators on my chart that gives me a potential buy signal, and I might want to sort of like intercept that buy signal before it's even developed by going into a lower time frame, which would have a similar signal being developed here, but it may have already been developed, and it might say yes to enter on this trade on this currency pair, and it might say yes to enter on this particular currency pair on this currency frame. But on the 1 hour one, it hasn't really been developed yet, so I can use lower time frames to get in on a trade earlier than expected. There are good sides to it, there are bad sides to it, but so you just have to be a little bit, on the ball. But overall, really, is that I try to look for from a bird's eye view, and then come down every single time frame. This is the first thing that I do. I come down onto the daily time frame when I look at my charts. I go, okay, that looks nice. I've got like a double bottom here, so there is a possible chance of me seeing this trade go back up. So if I'm going to do any sell trades from today, I need to be very cautious that I don't hit a bottom when I'm doing my buy trade. So then I'm going to come down and see for some more analysis and see what's going on. And then we're looking at the 4-hour time frame. Alright, we've had nothing but a downswing here, so there's a pretty strong swing. And if you take in consideration as well, in the daily time frame, we've just hit double bottom as well. So there should be some time in the near future for this to reverse. We've just had another huge downswing there, so I expect there to be some more downside to come. Let's take a look at the daily on 1 hour. The 1 hour just seems to be just following nothing but that general direction of a downtrend. There's no immediate support on the 1 hour time frame that we can see. Let's take a look at the 30-minute time frame and seeing what that one says. And again, it looks like we're going sideways for a bit, so it doesn't really seem that there's like much action going on right now. So I most likely would say to myself, I won't go for this currency pair. I'll probably go ahead and take a look, maybe at a different currency pair or something like that. Alright, now I know this might be a little bit confusing, but as I say, go through these videos more than once and it will give you a better idea. But in layman's terms, shortcut terms, and what I'm trying to say is that it's always good to narrow down into a smaller time frame to see what's going on at that particular current point in time, so you can work out whether you should go long or short on a higher time frame. Alright, and you can also work out how, to try and get in on signals before they happen on higher time frames, and you can also get out earlier as well on lower time frames than you can on daily time frames or 4-hour time frames. There's a bit of a lag there if you exit out of your trades on those 4-hour or daily or monthly time frames. Alright, so I hope that's made a little bit of sense. Okay, and I will see you very soon in the next video. Bye for now.